Foreign money is walking away. FDI, foreign direct investment, into the Philippines crashed by 40.5% in August, from $830 million last year down to just $494 million now. That's not a slowdown, that's a vote of no confidence. When global investors start pulling back, it's not because they suddenly hate the beaches, the food, or the tropical lifestyle. It's because the risk no longer matches the reward. Capital doesn't have emotions. It doesn't care about optimism or politics. It simply follows confidence. And right now, that confidence is fading. The Philippines once prided itself on being a rising tiger of Asia. A decade ago, it looked like the next big story: a young population, steady remittances, and a consumer-driven economy fueling unstoppable momentum. International investors saw promise, and for a time, the narrative held strong. On paper, the future was bright, and the path to prosperity seemed clear. But today, that story reads differently. Growth on paper doesn't mean growth in people's wallets, especially when currency volatility and persistent inflation change how returns feel in real life. The peso has struggled for stability. Inflation remains sticky, eroding purchasing power day by day. The stock market has not yet returned to pre-pandemic highs, lagging behind its regional peers, and household debt is rising faster than income growth, putting immense pressure on ordinary families. Even the so-called resilient sectors are running on thin margins. What looks like robust consumption is often driven by necessity, not confidence. People are spending because they have no choice, not because they feel secure about the future. Meanwhile, opportunity didn't vanish, it relocated. Our neighbors Indonesia, Vietnam, and Malaysia have become the new magnets for capital. Vietnam is now the new manufacturing darling of Asia, with Apple, Samsung, and Intel expanding operations there. Indonesia just attracted $30 billion in green energy investments and is becoming a hub for electric vehicles. They offered what foreign capital craves: clarity and predictability. And here we are, still debating fundamental issues like power supply costs, wrestling with red tape, and creating uncertainty with inconsistent tax rules. These policy flip-flops have pushed many potential investors to simply wait on the sidelines, leaving local potential untapped. Investors notice that, and they act accordingly. When you're an investor, you look for clarity, consistency, and confidence. But in the Philippines, what you often find is uncertainty, bureaucracy, and political noise. One week, reforms are promised, the next regulation shift again. Investors hesitate not because they don't like the country, but because they don't trust the system. And when money waits, growth stalls. The Philippines has become a missed opportunity, not because it lacks talent, but because it lacks direction. Look at the PSE, the Philippine Stock Exchange. It's a mirror of that sentiment. The PSE index today is almost the same as where it was years ago. It goes up a little, then it massively falls again. Meanwhile, the S&P 500, Japan's Nikkei, and even Vietnam's VN index have surged ahead. And here's the uncomfortable truth: most of the PSE's biggest companies are either overvalued, underperforming, or paying small dividends. Let's talk about Jollibee. Jollibee is one of the country's biggest success stories. For years, it was the darling of the local stock market, a symbol of Filipino ambition. It continues expanding globally, acquiring international brands, and opening more stores every year, a picture of relentless growth. And yet, its stock today trades far below its all-time high. The initial promise of a high-flying growth stock has faded, leaving many early believers questioning the narrative. The company grows, the empire expands, but the shareholders, they wait, holding on to shares that feel stagnant. The dividends are modest, barely keeping pace with inflation. The price hasn't recovered. For the average investor, the excitement that once surrounded this national champion is gone. Jollibee has become the perfect symbol of the Philippine market itself, busy, expanding, and full of potential, but not truly progressing in a way that rewards its investors. It's a difficult lesson on opportunity cost, because what's the point of growth If the people who believed in you, the investors who provided the capital, don't grow with you. And foreign investors understand this deeply. That's why they're not emotional. They simply go where the system works. And right now, the system works better elsewhere. In Vietnam, bureaucracy was cut down. Policies are predictable, results are visible. In Indonesia, investors see government support, fiscal stability, and real infrastructure progress. In India, reforms have unleashed a digital revolution, empowering both businesses and investors. Meanwhile, in the Philippines, we're still fighting the same battles. Slow projects, outdated laws, and a lack of urgency. So while others are building, we're debating. While others are attracting, we're hesitating. While others are moving forward, we're stuck in meetings. And the market knows it. That's why capital is quietly, steadily walking away. For ordinary Filipinos, this isn't just an economic headline, it's a warning. Because when foreign money leaves, local opportunities shrink. When confidence drops, jobs disappear. And when growth stagnates, your savings lose value. This is why keeping your money stuck in the local market is risky. Not because it's wrong to invest in your country, but because hope alone isn't a strategy. The reality is simple. A decade ago, the Philippines was hailed as the next big investment story. Today, while our local market seems to be standing still, global markets are running forward at an incredible pace. This isn't a story of failure, but one of divergence. The opportunities are immense and accessible. Look to the US, Europe, and the dynamic economies across Asia. We're talking about stocks, ETFs, and REITs in thriving sectors like technology, healthcare, and renewable energy. These are mature, stable economies where the rules are clear, governance is strong, and investors are consistently rewarded for their participation. You don't have to be a millionaire to invest abroad. The barriers have fallen. All you have to be is awake to the global landscape and willing to take the first step. Because if the market here refuses to reward growth, you owe it to yourself to go where growth is happening. Your capital deserves to be treated like a partner, not a bystander. It's not unpatriotic to diversify your portfolio. It's not a betrayal to seek better opportunities for your future. It's called being a smart, global-minded investor. Hope can be local, but your growth can be global. You work hard for your money. Okay, it's only right that your money works hard for you. If the system doesn't give you a fair shot, build your own path. If the market doesn't give you value, go where value exists. If your future feels uncertain here, look where the world is certain. Because hope is local, but growth today is global.